let's take a look at sweet spots in the trend. These are very simple. A simple idea. We want to be in an established trend where we have a high, a low, a higher high, and a higher low. Okay, so you've got a high, a low, a pulse up into A, that's our higher high, right? And then we want a pullback to a higher low. Often, not always, we get to pull back on top of old resistance, which will now be support. In a downtrend, it's just the reverse. We have a low, we have a lower high, some high existed up here, right? A lower low, and now we're looking for that lower high again in here. And this is where we're going to take the trade. We're going to take the trade on the rest phase at B. On the rest phase at B. So pulse is A, pulse up, pulse down. And we pull back and have a rest phase or a pause at B, and then continued follow through. That's what we're looking for. Basically, the drive up should have follow through as long as the pullback to B or the small rally up to B is relatively weak, and we'll talk about what that looks like. Does your definition of sweet spot have the pullback stay above the previous swing high? Not necessarily, but it shouldn't go too deep in there. So here's a couple of examples. Here's one on the 4-hour crude oil. We get that nice pulse up, a pullback, and then actually a choppy pulse from there. Not the best example of this, in fact. And we don't always get the best examples in the markets, unfortunately. Here we have a drive down, then the rest, and then the drive down. And just get the idea of this pulse idea. That's what we're looking at here. So here on, this is a daily chart. We get a drive down. It breaks the congestion area, which is nice. We get the rest, another drive down, the rest phase, another drive down. And you can see that it doesn't always come all the way back, right, to the swing low in this case at A. But that's okay. Now we get the rest phase here. We might be looking for another drive, and then look at what happens. We don't get it. We don't get that drive down below there. In fact, we get a spring, but it's not a spring that I would trade, and we'll talk about why that is in a little while. Then we get a drive up, a rest, and another drive up, and a rest, and another drive up. So this is something that the market, this is a behavioral principle of the market, this pulse, rest, pulse. And it's a very useful thing, or drive, rest, drive, however you want to say it. Let me just make sure I'm not missing anything here. Oh, yeah, let's go back here, and I want to talk about something here. So there's a couple of different ways to think about where this might go. We get a drive down here, and then we get the rest up to B, the rest phase up to B. So you could run a trend channel off of this, and that's useful, and you know that this is what you're looking for down here, okay, as a exit point, as a target for your trade. Another way to do it is to do what's called a measured move. Because we're looking, this is behavior now, this is mass psychology, if you will. We've gotten a drive down and then that rest phase. We're looking for a drive down that's basically about equal to that first drive down. So if this is AA here, drive AA, we're looking for, in the drive BB, we're looking for approximately the same amount of drive on that second leg, which is a very useful thing to have in your little bag of tricks, your bag of trading tricks. Because if you look here, you can get a nice, I mean, you can certainly do a trend channel in here, and you can, you know, it works extremely well, no question. Here it doesn't work quite as well, but This is an alternative you can use. So you get a pulse down or a drive down, and look, it's approximately the same, right? Pulse down, this one, as we said, isn't the same, and so we know something's changed, right? The wave structure of the market. These are waves in here. These are waves, and the market does move in waves, but I'm introducing this idea that the market also moves in pulse, rest pulse type of waves. So now we don't get the measured move down. And if we were to draw a trend channel on here, we wouldn't come all the way, well, in this case, we just about do because of the angle, but typically we wouldn't come all the way down to the bottom of the trend channel. And then we get a pulse up, and we get pretty close to equal. It's not always perfect. It doesn't always work out exactly, but you'd be surprised how often it does. How do you identify B at the right edge of the screen? B where? You mean any of these B's in here? We'll talk about that. We'll talk about that as we get into this. As I say, this is just sort of the overview here, the beginning of it.